The Zacks style scores are a complementary set of indicators designed to help you pick the best Zacks ranked stocks according to key trading and investment styles. Academic research has proven that stocks with the best growth, value, and momentum characteristics outperform the market. That is why we have assigned individual style scores of A, B, C, D, or F to each stock for each of these styles. As you likely remember from your school days, an A is better than a B is better than a C, and so on. That means the better the score, the better the expected performance. Since the Zacks rank helps predict which stocks will outperform over the next 1 to 3 months, the Zacks style scores were optimized to excel over this same time frame. These returns are on full display in the 10-year performance statistics we'll be sharing in a moment. The key to success, though, is to focus your portfolio on Zacks ranked number 1 and number 2 rated stocks, which have your preferred style score of A or B. Growth traders are primarily focused on stocks with aggressive earnings growth or revenue growth, or at least the potential for aggressive growth, which should propel their stock price higher in the future. You'll often find smaller cap stocks in this category because these are typically newer companies in the early part of their growth cycle. But you'll also find plenty of mid caps and large caps with stellar growth rates too. However, there is much more to picking growth stocks than simply looking for those with the highest growth rates. In fact, companies with the highest growth rates have been known to perform almost as poorly as those with the lowest growth rates. How can this be? It's because sky-high growth rates are unsustainable, and they can be priced for perfection. For example, a company earning 1 cent a share that is now expected to earn 6 cents has a 500% growth rate. But if it receives a downward revision to 5 cents, that's a significant drop. Even though it still has a 400% growth rate, the estimates were just reduced by 16.7%, and the price is likely to follow. If you've ever wondered how a stock with a triple-digit growth rate could possibly go down, that's how. By concentrating on Zacks ranked number 1 and number 2 stocks, growth traders can easily find companies exhibiting strong growth rates that are also displaying upward earnings estimate revisions, setting the stage for growth to continue. Quality is important too. The growth score further evaluates companies based on their corporate financial statements, which includes the income statement, statement of cash flows, and the balance sheet. Those with a growth score of A or B are deemed the best and are expected to yield the highest returns over the next 1 to 3 months. Value traders favor good stocks at great prices. This does not mean they have to be cheap in price, though. The key is the belief that they are undervalued, that they are, for some reason, trading under what their true value or potential really is. And the value trader hopes to get in before the market discovers this and moves higher. This deviation from their fair value is what creates exceptional upside opportunity. Those interested in value will typically look at valuations like PE ratios, PEG ratios, price-to-book ratios, and more. Of course, some stocks are cheap for a reason, or they may appear undervalued on one metric but not on another. Too many so-called value stocks have low valuations because they don't have compelling enough earnings or growth rates to speak of. Why pay up for a company if there's nothing to pay up for? So it's not enough to just look for stocks with the lowest valuations. They might be low for a reason, or worse, they might be damaged in some other way. These types of stocks are not value stocks at all, and they are definitely no bargain. The key for value stocks is the combination of both earnings and valuations. When a stock has a Zacks rank of a 1 or a 2, that means earnings estimates for a stock are rising. Given this new information, other investors will view these stocks as being undervalued relative to its future prospects. The value score further helps separate the wheat from the chaff by identifying the stocks most likely to outperform by doing a deep dive on their valuation measures. Stocks with a score of an A or a B rate the best on these metrics and help identify the truly discounted names. These types of value stocks have a long history of showing superior returns. Momentum traders look to take advantage of trends in a stock's price or earnings believing that these stocks will continue heading in the same direction because of the momentum that is already behind them. We've all heard the old adage, the trend is your friend. And who doesn't like riding a trend? In fact, studies have shown that stocks making new highs have a tendency of making even higher highs. Rather than simply looking for price trends, the Zacks rank is about cause and effect. The cause of the move is positive earnings estimate revisions. This upward shift in earnings estimates prompts more and more investors to take an interest in the company, with the effect being that shares start on a bull run. Volume increases, as does the stock price. But just relying on price movement alone doesn't alert investors until after the move has already begun, costing active traders opportunities to maximize profits. Conversely, by focusing on earnings estimate revisions, the Zacks rank can identify stocks that are likely to move up in the future before the breakout has occurred. In other words, the Zacks rank helps traders get in ahead of the price action. And the momentum effect is quite strong among Zacks rank number 1 and number 2 stocks, because as earnings estimate revisions rise, prices race to keep up as future estimate revisions are anticipated. The momentum style score further analyzes the stock's price momentum and earnings momentum, indicating when the timing is favorable to enter a stock with the highest probability of success. Momentum scores of A and B are the best at identifying when the timing is right to get in and stay in for even bigger gains. As you can see, for each specific style, the A's and B's took the top Zacks rank stocks to new heights. For nearly 3 decades, traders have gladly used the Zacks rank to beat the market. However, as you can see, not all top Zacks rank stocks are created equal. Some are better than others, and that is exactly why we created the Zacks style scores. To maximize your returns, you want to buy stocks with the highest probability of success. So that means buying stocks with a Zacks rank of a 1 or a 2, which also has a style score of an A or a B. There are times when it's perfectly all right to hang on to stocks with a Zacks rank number 3 hold, but when you do, the same grade hierarchy applies. A's are better than B's, etc. But under no circumstance should you buy a stock with a Zacks rank of a number 4 or 5, even if it has a style score of an A or a B. Remember, the individual style scores were created as a complement to the Zacks rank. Regardless of how a stock might score based on its valuation metrics or growth attributes, a poor Zacks rank still means the company's earnings estimate revisions are going down, which means a much greater likelihood that the stock will go down too. Earnings estimate revisions remain the most important factor impacting stock prices, which makes the Zacks rank the very first step in any stock selection process. Then, adding a favorable style score to the top Zacks rank stocks enhances your odds of success even more. But that also means selling a Zacks rank number 1 or number 2 if the style score you used to select that stock in the first place slips to a D or an F. As the performance results show, a weak style score robs the stock of much of its upside potential over the next 30 days. So it's better to sell that stock and switch into a new one with an A or a B. Any stock in your portfolio that doesn't fit these sell rules can continue to be held with confidence. But obviously, the more stocks you hold with a Zacks rank number 1 or number 2 and a style score of an A or a B, the better. If you categorize yourself as an income investor, there's no need to feel left out. Income investing, by its very nature, has a longer time horizon, especially since you'll need to hang on to your stocks long enough to receive the dividend. Usually this kind of investor is looking to hold on to these companies for longer than 3 months, and usually for a period of a year or more. Since the Zacks style scores focus on a shorter term, this is why we did not specifically create an income score. But you can still use the Zacks rank and the other style scores to get into the best dividend-paying stocks. Investors looking for income-producing stocks, dividend-paying stocks, are well served by looking for both growth and income. In other words, companies with stable earnings growth that pay a solid dividend. Oftentimes, these companies are more mature, larger cap companies that no longer have the kinds of spectacular growth rates like some of the younger or smaller companies, or like they themselves had when they were younger and earlier in their growth cycle. Many of these companies are generating huge amounts of cash, but because of their size, may not have the growth opportunities they once had. Consider this. An idea that generates $1 billion in profits for a $1 billion company represents a 100% growth rate. But that same $1 billion idea applied to a $10 billion company only represents a 10% growth rate. In other words, it's much harder to move the needle on earnings the bigger the company gets. So many of these companies will pay out a portion of their earnings to shareholders in the form of dividends. The income investor will want to take a look at a number of fundamental factors like the company's balance sheet, its competitive advantage, and its management. But the most tangible proof that a company is worth holding on to for the long term is earnings. You don't necessarily expect to see explosive growth, but you should look for steady and consistent growth over time. And a company that generates solid earnings growth is in a better position to raise its dividend over time as well. Earnings estimate revisions are the cornerstone of the Zacks rank. Whenever you find positive earnings revisions, you'll generally find a company moving in the right direction, making it a perfect candidate for long-term ownership. There may be fewer dividend-paying stocks in the Zacks rank number 1 group, but there will be plenty of number 2s, and you might even consider some number 3s for the larger cap companies. And be sure to look for those with a favorable style score. That includes growth, value, and momentum. Stocks with a solid growth score should outperform other income-producing stocks. Those with a strong value score will also do well, as research shows a strong correlation between dividends and value. And a good momentum score can be helpful as well, since nobody wants to buy a stock just before it tanks. What's the use in a dividend-producing investment if a negative capital appreciation cancels it out? Simply put, our research has shown that dividend-paying stocks with the highest future returns are the ones that are rated better on both the Zacks rank and style scores. Because of this, they should be considered the primary focus for investors seeking income from their stock portfolio. The secondary criteria should be the dividend yield itself. In most cases, once the best Zacks rank and style score stocks have been determined, the best income-based approach is to then select those with the highest dividend yield. Once again, as you know, you'll typically have a longer holding period with the dividend-paying stock. But a decline to a Zacks rank number 4 or 5 and a falling style score can be an early warning that business conditions are worsening and therefore that it's time to take profits and get out. Remember, the Zacks rank remains the first step in your stock selection success, while the style scores are the next and final step to lock in your biggest winners. It truly has never been easier and more profitable to find the best Zacks rank stocks than now, and to find those that are in alignment with your preferred style of trade.